India overtakes China, the new smartphone supplier for the U.S. India has emerged as the leading smartphone supplier to the U.S., surpassing China for the first time in Q2 2025, driven by Apple's accelerated production shifts in India. This milestone reflects a significant global electronics manufacturing transformation, marked by Apple's strategic focus on diversifying its supply chain and scaling iPhone assembly in India. The report highlights how such changes have been accelerated amid uncertainty regarding U.S. incidence progress. China trade negotiations. Despite continued forward-looking strategies from vendors, including Samsung's Galaxy A series expansion, the overall U.S. smartphone shipment volume rose only 1% in Q2 2025, underscoring challenges in maintaining steady demand amid evolving supply dynamics. However, the share of U.S.-made smartphones accounted for in India declined significantly, with India now holding 44% of global smartphone imports into the U.S., up from 13% in Q2 2024. Sanyam Chaurasia, Canalys senior analyst, noted that India's dominance in the U.S. market was unprecedented, largely due to Apple's accelerated shift toward India under the China Plus One strategy, which prioritized supplying the U.S. market. Meanwhile, Samsung and Motorola, though expanding their shares, saw smaller-scale improvements, with Motorola relying more on its core manufacturing hub in China. Analysts also emphasize that while vendors continue to front-load inventory to manage tariff risks, the overall growth rate, only 1% year-over-year, suggests a tightening economic environment and a widening gap between sales timelines. India surpasses China, the new smartphone export leader to the U.S. In a surprising turn of events, India has surpassed China to become the leading exporter of smartphones to the United States, a shift largely attributed to Apple's strategic manufacturing move to New Delhi. This development marks a significant milestone, as India manufactured smartphones made up 44% of the U.S. imports in the second quarter, a dramatic increase from just 13% during the same period last year, according to a recent report by Canalys. The report highlights a staggering 240% year-over-year increase in the volume of smartphones produced in India. Meanwhile, the share of smartphones exported to the U.S. from China has plummeted to 25%, a sharp decline from the 61% share recorded a year ago, pushing China to third place behind Vietnam. This shift is largely driven by Apple's decision to expand its manufacturing operations in India, moving away from China due to the uncertain trade landscape between the U.S. and China. As noted by Canalys principal analyst Sanyam Chaurasia, Apple has significantly increased its production capacity in India over the past few years and has dedicated most of its export capacity to the U.S. market in 2025, Chaurasia explained. However, it's important to note that Apple still relies on its well-established manufacturing bases in China. Despite smartphones and other electronics containing semiconductors being exempt from the harshest U.S. tariffs, Apple CEO Tim Cook mentioned in May that these devices still face a minimum 20% tariff. Cook also predicted that the majority of iPhones sold in the U.S. will originate from India. This shift aligns with former President Donald Trump's strategy to boost U.S.-based manufacturing by imposing higher tariffs on foreign-made products, making them more expensive for American consumers. China has arguably been the most affected by these tariffs. Earlier this year, Trump imposed a massive 145% overall tariff on Chinese goods, prompting China to retaliate with a 125% levy on U.S. products. In May, both countries agreed to significantly reduce these reciprocal tariffs for a 90-day period. U.S. and Chinese trade negotiators are currently meeting in Sweden to discuss extending this truce, which could provide an opportunity to negotiate a more permanent agreement. Despite this temporary easing of tensions, the ongoing tariff disputes have encouraged manufacturers to seek alternatives to China. This trend of diversifying supply chains away from China has been ongoing, with fast-growing Asian economies like Vietnam and India emerging as attractive alternatives. The pandemic further exposed the vulnerabilities of relying heavily on China, as its strict zero-COVID policy disrupted global supply chains and underscored the risks of concentrating production in one location. The uncertain outcome of negotiations with China has accelerated supply chain reorientation, Canalys analysts noted in their report. What do you think about this shift in global manufacturing dynamics? Could this be a long-term trend, or will China regain its position as a dominant player in the smartphone export market? Share your thoughts in the comments below. Lisa Edekiko, John Liu, Nectar Gan, and Ozania Bacon contributed to this report. Why U.S. smartphone growth is sluggish, India's rise in manufacturing. The smartphone market in the United States is experiencing a notable slowdown, with growth recorded at a mere 1% in the second quarter of 2025. This stagnation comes as manufacturers have preemptively stocked their inventories due to concerns over tariffs, while negotiations between the U.S. and China have led to a significant increase in the shipment of smartphones produced in India, according to a report from Canalys released on July 28. Why this matters? The introduction of tariffs by the U.S. has compelled smartphone manufacturers to rethink their supply chains. This strategic shift aims to mitigate the impact of increased import costs and safeguard profit margins. The situation is critical as companies navigate the complexities of international trade. Contextual background. In light of these tariffs, Apple has taken steps to shift the production of most of its iPhones sold in the U.S. to factories located in India. This move, however, has not been without controversy. U.S. President Donald Trump has publicly criticized Apple, threatening to impose additional tariffs on the company if it does not increase domestic production. Key insights. Sanyam Chaurasia, a principal analyst at Canalys, noted, for the first time in Q2 2025, India emerged as the primary manufacturing hub for smartphones sold in the U.S., primarily due to Apple's rapid transition of its supply chain to India amidst a volatile trade environment between the U.S. and China. Runar Burhovde, a senior analyst at Canalys, added, despite vendors ramping up inventory, the market's growth was limited to just 1%, reflecting a lack of robust demand in a challenging economic climate and a growing disparity between the number of devices shipped and those actually sold. By the numbers, the proportion of U.S. smartphone shipments assembled in China plummeted from 61% in Q2 2024 to just 25% in Q2 2025. India capitalized on this decline, witnessing a staggering 240% year-on-year increase in the volume of smartphones produced. In contrast, iPhone shipments saw an 11% decrease, while Samsung experienced a 38% increase in shipments during the same quarter. This evolving landscape raises important questions about the future of smartphone manufacturing and trade relations. Will the shift towards Indian production continue, or will political pressures force companies back to China? What are your thoughts on this trend? Share your opinions in the comments below.